General Electric shares have gained nearly 50% this year. Options traders, though, think the rally may have run its course. Pete's at the telestrator with the unusual activity there after a real big gain, Pete.
Yeah, big gain. And also you had Stephen Tusa yesterday on there with Jim Cramer and those guys talking about this whole thing as well. We'll touch on that for a second. But take a look at that chart. Talked about it already in terms of just what it's done this year. Really an amazing run by GE. And there hasn't been nearly the put buying, and we were talking about it for a long time. We haven't seen as much of it. Well, they're back today, Scott, and what they're doing is they're positioning just 2 weeks out, going to the March puts, and they're buying these March 9.5 puts. 135,000 of those were bought for 8 cents. They were spread off against a lower strike as well. But that was pretty interesting. Now, that's not as much money as usually, like we like to talk about, because it's an 8-cent option. So it's a very inexpensive opportunity if this stock is going to be able to push back down and get under that 9.5. The stock was just a little bit higher when they first started buying these. But yesterday, Tusa was talking about a lot of different things. One of those things being free cash flow. He saw that as an issue. He brought up multiple different areas where he and Jim were going back and forth. So is he going to be right? Because he stood steadfast that this is a $6 price target, despite the fact that it's made this big run up to 10.
That's right. He's stuck by 6.
Yep.
He said comeback's gone too far. He was just unimpressed.
Right.
As much as he was really praising the CEO, the new CEO.
Yep.
He just said the fundamentals of the company don't match the run.
Yeah, and it wasn't just free cash flow he was talking about. The other thing he was talking about was he had some concerns about GE Capital. He had some concerns about power. And I was just wondering, you know, the company that actually took those assets went up extreme. That means somebody thought that was a heck of a great buy for them. So was it a great sell and a great buy, or was it just a great buy? I don't know. But you can see this. Somebody's positioning themselves for this stock to be able to push back a little bit further, Scott. I got another one for you.
Go ahead.
SE is the symbol here. It's a Chinese company, internet company. Rarely do we talk about it, but you see this move. This was yesterday. There were buyers on the 25th, on February 25th, some very aggressive buying in there. They're buying the April calls, the April upside calls. Well, they're selling those calls out today. They paid 70 cents. They're selling them for over $4 a share. They're going into May. So they're going from April out to May. They're going from the 17.5 strike all the way to the 22.5 strike. They were paying about $1.75 for these. Pretty aggressive positioning. I love when I see that. This is a stock that did make a huge move yesterday, pulled back a little bit today, but somebody thinks there's still upside coming in the next couple of months.
Yeah, it's not that far off at 52-week high.